Hello, Financial Hub traders, and welcome to another episode of our Tuesday's Forex market breakdown. Last week we had a good analysis. We talked about oil. You saw oil has crashed to record lows. That was a very good video we had to talk about there. Today I won't talk about much. Today we'll focus on analyzing the market because last week I didn't analyze the market. But before that, I want to talk about something that people are currently doing that you really need to take care. So of late, of the past few weeks, there's been a surge in many people who are working from home. Some people don't have anything to do from home. Many of these people are looking of ways to make money from home, and one of the ways that many people are doing that is through the stock market, through the forex market. Many people are engaging into the forex market, especially the young people. Okay, so I want to talk about there's a video here, not a video, rather an article that was done by CNBC. So if we take a look at this, we can see currently it's saying millennials are piling into stock trading to beat the market. Okay, here's what you need to know. So before we get into this article, I want you to know one thing. For years, it's always been a debate that it's very hard for anyone to beat the market. It's almost next to impossible, especially the index funds, okay? So a few years ago, Warren Buffett had a bet, I think it was in 2007. He had a bet against some hedge fund managers, and he bet against them $1 million that in the next few years, I think it was about 10 years, they did that approximation, that no hedge fund will be able to beat the index funds or the stock market in terms of trading. And actually, here it is. So as you can see, here it is. Warren Buffett just won a $1 million bet and highlighted one of the best ways to grow wealth. So one of the best ways to grow wealth is just to put your money in an index fund. Just a disclaimer, I'm not here to give you financial advice. So any decision you decide to make is all up to you. That's not my part of work. What I just do is basically I focus on the forex market, and that's I do my own money. I don't trade anyone's money. I don't give advice for anyone to do this and that. So any decision you need to make, that's all on you. So basically, Warren Buffett won the bet, and as you can see here, in 2007, legendary investor Warren Buffett made a $1 million bet against protege trade partners that hedge funds wouldn't outperform an S&P index fund, and he won. So basically, over the length of that year, as you can see over here, he said Vanguard 500 index fund Admiral shares returned 7.1% compounded annually. So that's a lot of return compounded. If you know the power of compounded, Albert Einstein said that's the eighth wonder of the world. Compounded annually, while the basket of hedge funds his competitors chose returned an average of 2.2%. So that's a very big difference. So basically, if you're entering this and you're trying to beat the market, trying to outperform the market, especially if you're a new trader, that is next to impossible. So we don't try to beat the market, we just try and follow the market. What the market is telling us, we take trades on what the market is telling us, and that's what we'll do later on as we analyze the market. So if you look, the stock market has been battering as ongoing coronavirus pandemic continues, so many people are trading from home. So as you can see at this level here, investing up Robinhood saw record deposits in the first quarter of 2020 with daily trades up to 300% compared to late 2019. Okay, elsewhere, eToro, we all hear eToro online, and Raging Bull, the one for Jeff Bishop. I'm sure many of you see this online advertisement. Trading saw demand surge 220% and 158% respectively over the same period. Okay, so we can see down here, he also said so far in April, the trading site has added new users at a weekly rate of 7,000 people. Okay, so that is a lot, and many of these people do not know what they're doing. So out of these 7,000 people, 90% of these 7,000 people, which 90% is 6,300 people, are going to lose money. That's a guarantee in the next 30 days. Guarantee. It's statistic. It's always been like that. It's going to maintain like that. They're going to lose money in the forex market, in the stock market in the next few days. If you're here in Africa, because we're based here in Nairobi, and many people or people who watch our videos are here in Nairobi, you should pay attention to some things. So here's another article that you can go read. and it's basically the East African. So you can go to the www.eastafrican.co.ke, or you can copy paste what is here and read about this. So East Africa stockbrokers, okay, most expensive in Africa. They're the most expensive in the continent. So if you just trade, so these are things you should pay attention to, and that's what I'm just enlightening you. Do not rush into markets are dropped, markets are cheap, let's rush and make money. You will get the worst beating you've ever gotten in your life. So East African countries run the most expensive stock markets in the continent, with the bulk of trading costs related going to brokerage fees. So brokerage fees is basically if you decide to buy any company, any shares, any stock, the percentage fee you get, service fee you get, commission fees, all that add up, and they get to become very, very expensive. So as you can see, by study by Global Financial Investment Advisory, Riskura, shows that Uganda and Rwanda have overtaken Tanzania as countries with the highest stock trading costs in the region, with the Kenyan both being the cheapest. So within Kenya, NSE is one of the cheapest within the this side of the region in Africa, not in the continent. So Uganda have forked out an extra 4.1% of the value of shares as transaction. That is a lot. If you add up those calculations, you'll get to know that that is a lot of fees. In Rwanda, we can see that's about 3.4%, while in Tanzania and Kenya estimated 2.7%. That's in Tanzania, and 1.4% in Kenya. So these are things you should just pay attention to. So if you do not have any understanding of how to trade in the Forex market, okay, we really advise you not to rush into it. Personally, we don't trade in the stock market. It has those expensive charges. You can do it through online brokers, through the Forex site, but it still has expensive fees. For example, we can even take a look at, if you look at Amazon, okay, so people who are rushing, they're seeing these things. So Amazon, as you can see, let me put that, sorry about that. So if we take a look at the charts and we see this is the Amazon stock, so we can get to see Amazon is in new year highs, currently trading at $2,376 per share. So that's all-time highs. Amazon has been rising, the stock has been rising. If you take a look at Tesla, these are the most traded stocks so far. Tesla had a high of about 950 around there before the market started crashing. Right now, it's regained all that. It's currently trading almost at $800 per share. If you look at Netflix, what everyone is watching, currently new highs. As you can see, we are trading above new highs that it had before because of the ongoing surge in new subscribers. If you don't know, this past quarter, they've added more than 15 million subscribers worldwide. Their movies are making new records. People watching La Casa de Papel, Extraction, the new movies that just come out, all that is putting a lot of surge. People have nothing to do, so a lot of people are paying for their Netflix subscription. But if you take a look at Dow Jones, okay, these are index funds, you can see they're still low, okay, they fell a lot. So currently they fell more than 30%. So they reached a high of almost 30,000. So just shy of 30,000 at 29,500 around there. We dropped all the way to around almost shy. We just came shy of $18,000. So those are new. That's about 30% drop in the market. So pay attention to that. We're also seeing S&P. These are index funds. They're all trading below this levels. If you don't know what an index fund is or index is, it's basically a basket of companies kept together. So, for example, Dow Jones, they're kept together, then they're traded as a whole, okay? So Dow Jones, instead of going and trading maybe Apple on its own, those big companies, they're all kept together. Then you get this basket of index funds and they're traded as a whole together. So you can see Dow Jones has top 30 American companies by net market capitalization. So the biggest 30 companies on the stock market are here on Dow Jones. Though I don't want to get really deep about this may be a topic for another day, but basically my main point about this is to tell you people to take care. Do not just jump into this. So with that said, we have here a template for understanding the currency market. So for those people who have not don't know or may know, we offer online courses. So if you're trading from home, you can use our online platform to understand how to trade the Forex market, which we're going to cover later on today. So we teach you, we give you the tools, we tell you what we use to make money, the tools we use, and you get to understand what we do. So you can head on to our website at www.financialhub.co.ke, and basically here you will go financialhub.co.ke, or you can just search Financial Hub and it will just pop up, and you can purchase any of our courses. We also offer subscription where we give you a breakdown every week of where the market is going, but mainly you can go to our website and check all that. You also get our book and you get to analyze, understand. This is a whole about 200-page book, and we cover everything from technical analysis to psychology to fundamentals. So you can take a look at that. You can come and check our courses here on our website, get to see what is best favored for you. Personally, I'd recommend the legendary package. That's what we offer here, legendary package, which is the best. Covers, it's a 6-month program, covers everything. And also you can go on and check that. We also offer Forex signals. Not really it's signals, but we give you also a breakdown of the markets. We tell you, yes, here's where we're entering, but we urge on independent trading, make your own decision. But at the same time, we offer these packages at $35 per month and $90 if you pay in advance for 3 months, which you get almost 10% off for those 3 months. So that's basically what I wanted to talk about. So just take care, do not rush into the markets and start making losses for no reason. So with that said, let's look at what is happening in the Forex market. So what's happening on gold? Basically this is the gold weekly chart, and as you can see, we have our weekly support. Okay, weekly support, and we have this major level over here. So let me just mark that for you so that you can understand what I'm talking about. So we have that level, so that's about 1735, which market has tapped not once, not twice, but 3 times, as you can see what happened over here. So currently market has been on a downfall, and as long as we stay, so these are the things we're looking at. So step by step, so we go, market moves sort of like in a staircase. Okay, so up we go, so we get support, we go up, we come get support, we go up. So currently what I'm watching and making sure that if market reaches below this level, we should be cautious, and that is the weekly support at 1685. If market drops below this level and closes below 1685, then we can be down for a downfall. As you can see, this is the main sort of what market has been respecting, sort of this move. Okay, so bouncing off this top part, so market can drop further below. But if you go down to the daily chart, that's the weekly chart, that's really long term. But actually that was the daily chart. Yeah, this is the weekly chart. Yeah, so basically last week, so just sorry about that. So last week we saw a surge in price, so it was very bullish last week. By the close of last week, we were up as high as 1731 before the week closed. This week basically we've seen market drop down to 1701 from 1735. That's about 350 pips. Okay, so if you go down now to the 1-day chart, we've already covered the 1-day chart, so we're paying attention to those 2 levels. But now if you look at the 4-hour chart, okay, so looking at the 4-hour chart, this is what we're paying attention to. Okay, so using my Elliott wave analysis 1 2 3 4 5, you can see that formation. That's what I'm watching right now. So we had this impulse 1 ABC, 3 ABC, so 4, we got that 4, then now we're surging, maybe now to get that push to the 5. Okay, so if you zoom in, so we're currently respecting this channel formation. Okay, so market bounced from 2, bounced from 4, went beautifully up, respected it. We also bounced 1 3 level. Okay, so if you zoom in, this ABC correction is what was guiding us before the market shot up. So we had sort of this channel formation. Market came and respected 1665 as its support, just shy of 150 pips, shy of 1650 major key level, and market shot further up, breaking this trend line. Now we broke in this other one, and currently we are getting that retest of this other one. So basically we had this bounce here, this time tried to bounce from this level but broke above, and now we're getting that retest on this level. So currently, and also in line with 61.8, as you can see, this is Fibonacci 61.8. So currently I have a long position on this one, but you should be wary about this one. Market can drop. Okay, so we've gotten that first bounce, second bounce, third bounce, so anything can happen over here. If market continues to the downside, we can drop below, but there's a lot of resistance at this level. That's why I'm long. So you can see it's a retest of this line, it's a third bounce of the trend line, and also 61.8 Fibonacci level was tapped at 1692, 1693, that level. So currently right now the time is 10, so 10:44. So what I can tell you, wait for the 4-hour close, which will be at 12. Okay, the 4-hour close will be the close for this candlestick over here, and then the next 4-hour candlestick, which will close later at 4 p.m. later on today, is what will indicate whether we'll be going long or short. So the 4-hour closes are very, very vital, so that's what I'm looking at. Okay, so wait for those closes. If you go down to the 1-hour chart, there's a lot of noise happening at that level. So as you can see, we got that push to the upside, very good bullish close even on the 2-hour chart. We got that nice pin bar formation, market short above, closed above that, closed above 1700 at 1702, but currently market now is battling between 1702 and 1704 and 1700 level. So if you go down to the 30 minutes chart, okay, just intraday, what you're looking at, we have this channel to the downside. Okay, so as you can see here, I had a Monday intraday support which was broken earlier on today morning. So market just broke it, hell opened loose, market fell all the way to 1693. Okay, so currently we're respecting this channel formation. So what can happen at the same time, okay, is that so we're anticipating anything. Okay, so market can still surge to this level, maybe 1708, 1710, market can come to that level and maybe again respect the channel and drop further down. That is something I'm also expecting before we shoot up. And also it can just come and continue tumbling down all the way. So this is all about speculation, okay guys? So you're not fighting with the market to tell the market, let's go up. No, you just follow what the market is telling you. So I'll be paying attention to how market closes around this level. So with this level, you can see it's my Monday intraday support in line with our downward trend line. Okay, so I'll be paying to how market, if market shoots all the way to this level, I'll be paying attention to how market closes around here. If it closes with bearish signals, I'll be coming out very, very fast, so I won't waste time. But if you get that momentum to the upside, then I'll be waiting for market to shoot further up. If you go to the 15-minute chart, for those people who use pivot points, we can see this was S3. So we normally cover this on our private group, so we can see that was S3. Market was capped at that level and currently is shooting up. So this was a very good entry, and I didn't get that perfect entry at this level. I got when the market was nearing 1700. So that's what I'm watching right now. If market comes with momentum, we break above this level, okay, and we get to start pushing up, then market will be heading to levels above levels around 1750. Okay, so if you go to the 4-hour chart, that is what you're seeing, that is what we're targeting. So if you see this level, so currently let's say this 4-hour closes around 1700, you get your long position. Sorry about that. So you get, let's go 1-hour chart. What is this? So let's make it visible. I want you to see it on the 4-hour chart. So 4-hour chart, so you get that surge, you can get around this level, put tight stops just below the trend line, maybe around 1690, that's 1690, 1685, depending on your risk tolerance, and you get about 1 to 4.5 risk reward to 1750, a clean trade for the week. That's about 500 pips for the week, and you're done. And that's it. So that's basically what I'm watching. This can really give an indication for where market will be heading on this week, because today is still Tuesday, we have Wednesday, Thursday, Friday. So let's pay attention to that, and that's what I'll be watching. So apart from that, let's move on to another chart analysis, and we can end it off there. Yeah guys, so my next analysis is Euro USD, and we can look at this and finish it off so that we just don't make the video too long. And basically what we're watching to see is a close. You can see here I was watching to see a close below support. So I was talking about this with the private group on our subscription page on our pre-market on Sunday analysis. So what I paid attention to was it on the weekly chart? Yeah, so I told them that we're paying attention to this. So you can see this close. This is a very close you should pay attention to. So it's sort of like a doji, spinning top, depending on what you call it, and it can catalyze the market to go up, but I don't pay attention to that now. So basically what we're covering, so you can see this close we had on this day. This close is what made us be really wary about this. So on Friday last week, market tapped below this level, then market shot all the way up. So this was my weekly support on this level. So market went shot way up. We are seeing on Monday we didn't have much momentum, which was yesterday. But if you go to the 4-hour chart, that's where we're paying attention to what is happening. Okay, so beautiful analysis on this one. So you can see we sort of have a channel formation. Okay, so we're getting that bounce here, so we're getting to see market is sort of in a channel formation. So I have this as my main channel, this and this. Okay, so that's my main channel analysis on this one. But we have this inner one, so this yellow line that you're seeing here is also in parallel with this one. So you can see market came down, we didn't get that push to touch this channel, and market bounced off that level. So I'm also looking at this lower boundary to see what will happen in the market. But what we're paying attention to is this inner channel that you're seeing is being broken at the moment. Okay, so I had a very good analysis on this one. Last week we saw market close over here. There's a very perfect entry at this level, which will get that down to that at this moment, but that's in the past, no really need to pay much attention to. So you can see we respected this channel, market bounced off this level. I had my Friday support, intraday support. Now I have my Monday resistance at this level. So market broke above this channel formation, currently retesting, depending on how this one will close in the next 1 hour at 12. We can catapult this pair, maybe even to push further up. So what we're paying attention to, if we go down to the 1 hour chart, okay, so you can see, so as you can see, this is what I was saying. We had a very good entry over here. This was a very beautiful close. Market rejected that level and rejected the second time, so almost a 3-pin pattern at this level, and market shot all the way up above. If you aren't able to get an entry over here, you got an entry over here. So market shot all the way up about 100 pips to 1.0856 level, and currently you're seeing momentum might be coming back into this market. So let's pay attention to this. Market can come and touch this level, the trend line, and we can see where market will be taking us from that point. Okay, what is also guiding me on this, if we go back to the daily chart, is the dollar index. Okay, so pay attention to the dollar index. Here we go. So you can see dollar index sort of having a double top formation at this level, not clearly seen on the 4-hour chart for sure. As you can see, we sort of had this trend line coming down, market broke, we entered into sort of a consolidation. Actually, let's go to the 1-hour chart, I have a better analysis over there. There we go. So you can see market came to that level. We came down, sort of, as I said earlier on, market sort of moves like we're going down in stairs. We came down, had a breather, came down, had a breather, and market finally came down there. So market came back up, we entered into a channel formation, formed a double top. I was watching this last week on Thursday, Friday, I think it was either on Thursday or Friday last week, between Wednesday, Thursday, and Friday, before market started shooting down. So what's going on? What's this line? So we can see market shot down, had a this one didn't really go back to retest the market as you're seeing on the Euro USD. Before now we're getting this close, as you can see, market coming down with momentum. So on this one we can be targeting the trend line, as you can see this trend line over here, which started down here. So 1 bounce, 2 bounce, so market can drop all the way down to this level. So we can see market coming down to this level, then we can pay attention to what happens at this level. If market breaks below, we can be seeing maybe momentum going to the upside, but we can maybe respect the triangular formation that is in play, and market can come and touch this level and push back up to touch our resistance level at 100.8 level yet again. So pay attention to that. That's what I'm looking at this week on the markets. Aussie dollar, we're also paying attention to that, also looking like it's pushing to the upside. GA looking like it's pushing to the downside, and further analysis on those ones. So I won't cover those ones today, we can cover them maybe next week. And basically that's what I have for you guys today. So yeah guys, that's what I have for you today. We're still looking at other analysis. We're seeing GA, as I've just talked about, and I hope you have a wonderful analysis. As we keep saying, always use our analysis not as a trade signal, but as a guide to what you're analyzing. We really emphasize on independent thinking, so think on your own, make your decisions on your own, because we're teaching traders to become profitable traders, not to become copycats. Okay, so always teach yourself, go ahead, read books, a book I'd recommend for traders is Reminisce. I always struggle to say the first name, but Reminiscences, whatever, of a stock operator, as long as you understand what's in the book. So that's what I'd recommend. This for traders. Get very good analysis. Very good, not analysis, lessons on how to trade the market, things to be looking at, especially on commodities, trading gold and trading all those other commodities, maybe silver for people who trade copper and all that. So that's basically what I have for you guys. I hope you have a wonderful week, and we'll see you guys next week. So stay home, stay safe, sanitize, and let's keep social distancing rules that the government is giving us wherever we are in the world. So basically that's it. Have a wonderful week, guys.
Economic recession and a bear market.
This is the time we tell you people to sit tight and watch the markets closely. Don't mess with momentum. Don't mess with momentum. Don't mess with momentum. Don't mess with the trend. Don't mess with the trend. Don't mess with momentum. Don't mess with momentum. Hey, I've